Let's look at how manufacturers determine their total product costs and how they then also determine their cost per unit. It's a little more involved than a merchandiser because, of course, the manufacturer has a lot of costs incurred in getting their inventory in place and ready to sell. It incurs material, labor, and overhead related to the making of the product. So the way you figure out your total product costs is you add those materials, labor, and overhead, and then you will divide it by the number of units made. In other words, total product costs divided by the number of units made to get your cost per unit. You do not include in your product costs the period costs. Those are all your selling, general, and administrative costs. Those are all expense. So in doing a lot of these problems, you're going to be required to determine whether it's a period cost or a product cost before you can figure out what your cost is per unit. So here we have an example where Walk and Roll made 5,000 rolls. Now this is different than, so they didn't sell 5,000, they made 5,000. Now we had no beginning inventory because it's its first period of business. If there was beginning inventory, you'd be including, or it's a little more complicated. I probably should just leave it at that. For our purposes, they've made 5,000 rolls. They've sold 4,000. Now, the number of rolls doesn't help us when it comes to dollars. So we need to translate that into how many dollars do each of these rolls cost. So the first step is you got to figure out your total product costs. Again, you're going to take your materials, your labor, and your overhead. So in this example, we have the raw materials, that's the 5,000, plus you have your labor of 4,000, and then the overhead, I'm jumping down to the factory equipment depreciation of 6,000. What I did not include in here are period costs. Those are the costs that were not part of the making of the product. So the amount of total product costs is 15,000. So to get the actual cost per unit, you're going to take that total cost. Then you have to divide it by the number of units made, in this case, not the 4,000 that you sold, but the total that was made using all of these dollars. So you come up with then a $3 cost per roll. Now, as far as what are some of the things we would do with that, we're going to figure out cost of goods sold, and that's the amount that will be on the income statement. Well, we know it's $3 per roll. What we then have to know is, okay, well, how many units, or in this case rolls, were sold, and it tells us 4,000. So our cost of goods sold would be the $3 per roll times the 4,000 rolls, or $12,000, and that'll be expensed. What's left on the balance sheet is the inventory, and again it's $3 per roll. But how many rolls are left in inventory? Well, we had, again, beginning inventory of nothing because we just began, plus the 5,000 we made minus the 4,000 that was sold, meaning there was 1,000 rolls left. So the ending inventory on your balance sheet would be 3,000.